Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. The day started with U.S. Treasury Secretary Mnuchin and Fed Chair Powell being grilled by the Senate Banking Committee. They defended all their efforts, all the money being printed, but they were pretty negative as well on the potential recession, the conditions that are going to unfold over the coming months, and said more is going to be needed. So markets stayed bid. I mean, we had the news from Moderna yesterday that ripped things higher, the 60 Minutes interview from Powell before that, but it was the news again on Moderna that actually pushed risk assets lower into the close. The S&P sold off pretty sharply. Tech moved lower as well. There was reports throwing cold water over the positive trials for a vaccine. There's not enough news, or not enough to conclude that it was a positive trial. And so we've seen a lot of selling at the end of the day. Let's take a look at the heat map here. Overall, it's the laggards that actually performed yesterday that are the darkest red or the brightest red on this heat map, which ultimately you can see here too, the tech, very little very little ground loss between Microsoft, Apple, Alphabet, and Facebook and Amazon actually finished positive still. So it's the tech that's holding things together when the tide goes in. So you can see here in the S&P, we came off the high. This is an overnight spike. That was after the German ZEW sentiment data blew out of the water. Much better sentiment over the next 6 months expected in that number. But outside of that, you also have a little bit of a head and shoulders pattern developing here intraday. You can see that from yesterday. The shoulder there, and a head here, and now we're falling out of that. That could bring additional negativity into the market. But what we're also moving here, I want to kind of take a look and include this first spike coming out of the May lows. And you can see here, this is just going to be a big area, 28.85, 28.90. It's going to be a huge area of support. We imagine we could see this area tested into tomorrow morning, whether it happens early tonight or sometime closer to the bell tomorrow. This is your support. If you faded this move, which we talked about in the Morning Express today, that we were actually cautiously bullish yesterday, not ultimately to chase positions into what is major 3-star resistance, but to turn traders away from thinking that they could go ahead and try and fade that move. Mondays are very tough days to try and fade when you have such a ramp like that. And we talked about it in the Morning Express today. And our only major 3-star support is that 28.90. So look at it about 28.85, 28.90 as an area that we now think that should be tested. So keep an eye on that in through tonight. Going back to the charts here, look at crude oil. The June contract is now off the board. So July contract is what we're focusing on. You can look at a 382 retracement, aligns with previous highs, get the 50-day moving average down here. We believe crude oil should come back down into this area here, $27, $28. That's where we should see this thing. And, we were pretty negative on crude oil for quite a while, well before this whole coronavirus issue. But coming out of this rally, too, we had gotten negative on it when it first started moving up to about $26, $27. We've been patient. We haven't taken on, or recommended to clients taking on any big risk, but I think overall, slowly adding into some put spreads, looking for something to capitalize on this move lower is going to pay off. So I think we will see a move lower. The inventory data coming into the picture. And remember, they're expecting a draw at Cushing. So that's going to be important to keep an eye on here through into tomorrow morning, as that's going to move crude oil. Next up, let's look at the Treasuries, because you had Treasuries recover late in the session. After this, let's look at a 30-minute chart. This is the 10-year. You see the 10-year Treasury prices recovered sharply in the session on the Moderna news. And ultimately, go back to the daily, you can see here that this held the 50-day moving average, a nice move here coming off of that. And the 30-year bond, though it's below the 50-day moving average, is still holding well within this channel. And now we believe it could be time for this to now turn positive or turn back up north here towards the top end of that channel. And as we've talked about over a number of spots that we've done here through myself and others here, Phil Strebel at Blue Line Futures, we do think there is going to be one more move lower in yields, one more push higher in Treasury prices that we expect. So this could be the start of that if the equity market starts to move lower. If there's a little bit of a risk-off wave here, and look at the equities, they're stalling at key levels of resistance here, previous highs. So this is where things can start to get going. Now, Looking at 2, gold stayed bid all day. Gold was moving well off that area of support we talked about here yesterday. It got a little bit of a push later in the day too because of the Moderna news. We think gold is recovering well, and we would expect it to trade higher overnight and into tomorrow morning. We continue to be bullish gold. We are cautious, less cautious now than we were coming into today, where that 1735 area did hold. Now silver, this left a tail yesterday. If you look here at this daily, heck of a tail, but we battled, this market battled back. We're still looking for at least 1850 in silver. We like silver, and there is a good path to least resistance higher. But what you want to be careful with is if the stock market does start moving lower, it could weigh on silver. So yeah, there is support at 28.90 in the S&P, and we do think that should get hit. It's not far away here from where we closed, but if it breaks through there, gotta be careful with silver. So in the meantime, we do think silver should trade higher. We're looking for 1850, and we think that's an area that you need to capitalize on longs in some way or another, and we're here to help with that. Now, let's finish up here with the currencies. The euro, and the euro's move was not just the euro bond and the progress that France and Germany coming together on that yesterday. It was also the risk on, and that was a tailwind. But you can see here, this is a daily chart in the euro. The 50-day moving average, the 50-day has been a very tough ceiling for it. And yes, it got above there today, but it didn't really finish the electronic session there. So this could be a nice tail that could gather some additional steam to the downside for the euro. So if you take this trend line and you get rid of this trend line, what do you have here? You really have this as a focus. So there's 2 ways to look at it in the way the euro could be seen here. And we could be hitting a good ceiling with the 50-day moving average. And now you have this area. Can it go back and retest this? And we do not think the euro would hold a retest to here. Now, another one that left the tail today is the Aussie. Now, despite a very negative, very dovish RBA minutes last night, the Aussie stayed higher with the risk sentiment. But again, you saw a move here later in the day. Now, these aren't necessarily all going to be settlement levels. These are electronic close levels, so keep that in mind. And then another side of the currencies to look at, though, is the yen. This is more of the safe haven move, but it still looks negative. And it's alluding to us that you get this rollover here through the 50-day moving average. It's alluding to us that outside of the risk on part of the U.S. dollar that weakens the U.S. dollar when markets go risk on, it's telling us that the dollar is holding ground. The U.S. dollar is holding ground. It wants to gain ground against the yen. I think it's going to gain ground against the euro and Aussie here over the next 12 hours and through tomorrow morning. So let's keep an eye on this and how this develops. We are here to help. Give us a call, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.